Thank you for attending the third Cannabis Investor Webcast. I would like to thank our platinum sponsors, Lexaria Corporation and Viridian Capital and Research. Please view the Viridian Cannabis Industry Report, which can be found on our website or at viridiancr.com. Please type questions for the presenter in the questions box. Our speakers today is Scott Griper, President, and Michael Schwartz, Research Analyst of Viridian Capital and Research. Scott and Michael, give me a couple of seconds to make you the presenter and turn the screen over to you.
First of all, thank you for allowing us to participate. We're happy to speak with everybody today. My name is Scott Griper. I am the President and founder of Viridian Capital and Research. We are a Wall Street's first investment banking firm and strategic advisory firm for companies in the cannabis sector. I'm here with my head research analyst, Michael Schwartz, and we'll be talking to you about our practice, why we got into this space, and the value that we're providing to our public and private companies that are currently operating within the cannabis market. So Viridian is a boutique firm located in New York City and Washington, D.C. We are a traditional investment banking practice. We raise capital for our companies, and we've raised over $400 million for our clients over the last 8 to 10 years, principally small public and private companies. And we also have an active mergers and acquisitions practice where we buy companies for our clients that are looking to supplement their organic growth by acquiring growth, whether that's a product line or intellectual property or another existing business. And of course, we have a sell-side M&A practice when our clients and their boards are ready to look for a strategic exit opportunity. In addition to the investment banking practice, we have an advisory practice that fits hand in glove, where we help to increase the capability of our client companies to achieve their growth plan and manage their growth. And we also increase their ability to manage and govern their company by adding board directors and other C-level executives around the CEO. We've been doing this kind of work for 25 years. We have a passion in working with small companies, helping them build, helping them scale, helping to fund them, and eventually looking for a strategic exit opportunity so they can monetize their hard work and sweat equity. We've been doing this principally over all this time for small emerging growth technology companies in cybersecurity, in communications, in the internet, in physical security, and in IT. And we have a very good and long track record of engaging with companies that we believe are the best-of-breed technology providers in their market, helping to scale and grow these companies, provide financing, and at the end of the day, increasing their enterprise value. And as a result of that success, we've also made quite a lot of money for our investor network, which is principally private equity firms, family offices, hedge funds, and extremely high net worth individual investors. About a year ago, we got a call from one of these investors, a private equity firm in New York that has invested in a number of transactions that just invested in and took public a company in the cannabis space. And as this firm does with every one of their public platforms, they brought us in to do what we do. This was our first exposure to the cannabis market. 2 months later, one of our board members, a former U.S. ambassador, also joined the board of a cannabis company, and as he does every time he joins the board of a small company, he also engages us to do what we do. And so all of a sudden, we were in the cannabis banking and advisory practice out of no real intent of our own, and we spent quite a lot of time, almost 4 months, analyzing the sector, diligencing the business models, the technologies, the regulatory framework, and we decided that it was not only quite fascinating, as all of you think, but could really use what we bring in terms of building the capability of these companies in terms of a management and a board, real world-class operators to help manage the growth of these businesses, and the credibility to attract professional capital. And so about 6 months ago, we created Viridian Capital and Research. We've built out our team. We continue to make new hires. We've got 7 or 8 current clients in the space, and we're right in the middle of it. We just announced a new client assignment this morning. So what makes us unique is we are sector focused. We have raised capital for companies in the space already. We have added board members. We have added management teams. We've made a difference. And we become the advisor to the CEO and the board of directors for each of our clients. And by doing all of that work, by the time we're out in the market looking for capital for these clients, the story has been de-risked to some degree, and that's what our investor network looks for from us. Oops. So these are some of our differences. We are made up of a combination of Wall Street bankers and analysts, ex-government employees, and ex-CEOs of public and private companies. We're in the market every day through our research and through our representation of clients, speaking to investors, speaking to acquirers, so we are quite familiar with the sources of capital and sources of deals and sources of acquisition opportunities in this space. We're not a fund. We don't have any fund bias. And the advisory and banking practice together really makes us a very attractive sole source vendor to our clients. Here's some of our team so far. The top is me. As I say, been in the markets for about 28 years and done a lot of transactions, developed a real passion for helping small companies scale and get themselves funded and develop real world-class capability to manage their businesses and attract capital. And I hold all the requisite licenses, broker, banker, analyst licenses. Mark Sauter is our head of M&A. Mark was a principal in the Spectrum Group down in Washington, D.C., which is the leading M&A firm in Washington, D.C. He's been involved in dozens and dozens of buy and sell side M&A transactions. 2 weeks ago, we announced a successful sale of one of our client technology companies. Mark is also licensed as a banker and an analyst, and as I say, he heads up all M&A for us. Carl Kleinman is both a lawyer and a banker, 30 years experience running private equity firms, running investment banking firms, and his responsibility is when we are actively engaged in an investment banking assignment, Carl does all of the negotiating, structuring, drafting of documentations and terms. Michael Swartz is our first analyst dedicated to this space. He's been working as an analyst for another private equity firm in the cannabis space for 2 years. The smartest guy I know in the space, and Michael heads up all of our research, both sector research. We published the industry's first cannabis sector report about a month and a half ago. It's available on our website, viridiancr.com, and now we are beginning to publish all of our company-specific reports. These are some of our board members. We've not announced any, so I'm not going to divulge names here yet. We will at the beginning of the year, but you can see the background, the roles of each of the board members that have agreed to join our board. So what you're going to see here is people out of industry, people out of government, people out of the private equity world. It is our intention, and it is exactly what we're building, to be a partner to the government in helping to build and finance cannabis companies. I don't have to tell any of you the government's role in the evolution of this industry, either at the state or the federal level. But it is our intention, and what we're building is we want the government to look at us as a trusted advisor to help companies not only be compliant with regulations, but to develop best practices in terms of running their businesses. And so we've got a U.S. ambassador on our board. We've got a former DEA administrator, one of the highest ranking women in the FBI history on our board, a former senior person from the Department of Justice, a former head of security for Health and Human Services, a former portfolio manager for a New York-based private equity firm, current executive for top 2 pharmaceutical company in the world, and a former CEO of one of the world's largest security companies. We do this not only to bring advice and expertise to our practice, but to bring advice and expertise to our clients. And when and as we get engaged to build or to supplement boards of directors for our clients. This is sort of our bullpen of candidates that we take and put on the boards of our clients, and have successfully done this for a number of years, that bring tremendous value to small companies in terms of the cachet of these folks, the access to opportunities that these board members bring them, and really the insight and experience they bring as former CEOs of larger public companies. This is a little more on investment banking practice. We have a full range of assignments that we take on, financings, both debt and equity, M&A, both buy and sell side, restructurings, spin-offs, roll-ups, valuations. We're a full service on the investment banking side. As I say, we've been doing this for about 30 years and have pretty much done every type of deal you can. But what really makes us unique is this advisory practice, really helping to scale and build and provide proper governance and proper management and proper reporting standards and best practices for our clients. The opportunity in the cannabis space is well known by each of you, but I will tell you that the largest concern, the biggest concern on the part of the investors is the management teams, the governance, and the boards of many of the companies in this sector, public or private, that to one degree or another need help, need maturity, need sophistication, and it's going to be either a hole in the industry that's going to hold it back, or if the industry can attract more seasoned, experienced operators, executives, C-level suite folks, that will really help accelerate not only the growth of the industry, but giving the government and the states the comfort that there is real operating expertise and integrity in this sector. We also, before I leave for this page, we also have been very successful in bringing in channel partners for our companies that help them not only create more visibility in the market, but access end user opportunities, sell through their technology to large end users. I'll tell you that on the IT and security side of our practice, which is another company we have, just in the past year we've signed on these companies as resellers of our clients' technologies. Boeing, Microsoft, Stanley, Ingersoll Rand, Johnson Controls, United Technologies, Honeywell, and those relationships provide scale to our companies and have resulted in tens of millions of dollars in product sales for our clients in a very cost-effective way. One of our core tenets in our business and our core philosophy is we lead with research. Many of us are analysts. I happen to be one of the top-ranked technology analysts when I was working for larger investment banks on Wall Street in the 90s and 2000s. We think research matters, particularly when you're trying to reach the institutional investor, whether that's a small private equity firm or a small family office. If you're a public company and you don't have research following, you're considered to be orphaned. You have no coverage, nobody's following you, nobody's writing research on you, and it makes it very difficult to bring credibility and visibility to the professional investor. So we lead with research, both the sector research we released a couple of months ago and now the company-specific research that we've been writing over the last few months. This has, over the last 10 or 12 years, had a very significant impact for our public company clients in regard to increasing stock price and market value, and also in increasing liquidity, the trading volume of these companies. Over the last 8 years, on average, from the time we initiate a research report on a client, a new research report on a new client, in the following 3 months, the average company has seen its stock rise 290%, and the average company has seen its daily trading volume increase by more than 1,100%. And that success begets success, because by increasing market value with a sustainable upward move in volume, trading volume, This enables the institutional investor to feel more comfortable that there's real liquidity in this sector, which does not exist on the whole right now. So we believe in research, we believe in the value of research to the companies, and we believe in the value of the research to the market value of our clients. This is our methodology. This was not created at a point in time. This was really created over many, many years of working with emerging growth technology companies and sort of creating a formula for achieving sustainable gains in enterprise value and making money for investors. It is a brick-by-brick, block-by-block exercise. There's no magic to this, but it is a formula that has proven itself out over many years. I will say the key determinant factor in success for increasing the value of the company is the ability of the company to execute on its plan. That is the driver of everything. But assuming that that's happening, here is how you get the investment community to become aware of your company, to start investing in your company, and ultimately to find and execute a nice, profitable, strategic exit. It starts at the bottom brick with building capability and credibility. There's building the board. There's building the team. There's getting industry certifications, whether it's a UL certification we achieved for a client about 3 months ago, or a GSA schedule we've achieved for several clients over the last couple of years. This is really the first assignment for us. Secondly is building the business by bringing in the channel partners, as I discussed before, or making direct introductions to end users. We have been successful in driving sales for our clients' technologies. The third brick is really building awareness, brand awareness, mind share, visibility. So we have our own conferences, investor conferences that we hold over the years, typically in New York and down in Washington, D.C. We attend a number of investor conferences in the country. We were at the Cannabis conference in New York about 3 months ago, and in the show in Vegas about 3 weeks ago. And we get our company speaking slots at these conferences in addition to ourselves. We also write white papers on our companies and business plans so they can more properly communicate what their business model is. The next brick particularly applies to public companies, and this is all about investor relations. This is about using research and communications and press releases to reach and communicate with the public market investor. This is one of the things that's most challenging to small public companies that are, daily trying to survive and grow and fund. There's 10,000 public companies in the United States, and as a micro-cap public company in the sector, it's very hard to get visibility and awareness to the investment community. So we do that as part of our service offerings through research. We write the press releases for all of our companies, and it's a way really for us to establish mature, consistent communications with the street. Next brick up is the most important brick to many of our clients, which is the capital. None of this matters unless it improves the ability to reach and close investment rounds from professional investors. The cannabis industry is in a very nascent stage. There is persistent need for growth capital that's only going to increase. We metric out and track every financing that's been done in this sector over the last year. That's in our research. We metric and track every M&A assignment that's done in the cannabis sector. That's in our research. And as I say, we've closed about $400 million in funding for small public and private companies over the last 10 years. We work with both debt and equity financing in helping to build an optimal balance sheet for our clients. And lastly, and really the highest value that we are able to generate for our client companies and our investors, is to achieve a profitable exit. That could be just taking a company public or doing a secondary offering. It also could be finding a strategic investor that's willing to acquire or take a majority stake in our clients, and we have successfully achieved a number of those. But all of this is geared to one thing: increasing the enterprise value of our clients, our company clients, and making our investors money. This is a quick case study. I only chose one. It is not in the cannabis sector. We've not been broadcasting our clients in the cannabis sector yet. We will come the new year. So I just took a client example of a company that's been with us for 7 years in the Homeland Security space. This company happens to make a product that's able to detect explosives. When we were engaged with this company, the market value was under $1 million. It was trading 10,000 shares a day. The market value today is about 150 million, 160 million, and it's trading about 500,000 shares a day. So we've had a material difference in the value of this company. And as you can see, everything I've talked about in what we do on the advisory and banking side is encapsulated in our assignment for this company. We wrote the first research report. We wrote the business plan to restructure the company that was approved by the board. And then we got the assignment to sell off the non-security assets, which we did. We rebuilt the company's board of directors by adding 4 of our board members. Howard Safer, former police commissioner and fire commissioner of New York. You could read the names. We assisted the company in recapitalizing itself first through a working capital line from a private equity firm in New York that started out at $1 million and now exceeds 30. So they've grown with the company. We've closed contracts with foreign governments and with U.S. Companies, as you see there. And most importantly, and the hardest job here, was to get the company qualified with the Transportation Security Administration, which we did by lobbying the congressional heads of Homeland Security and the relevant senators down in D.C. through our relationships. And that just led to a $161 million contract that this company was awarded with the Transportation Security Administration. Some of the key benefits, we've done a lot of deals, so we know how to position companies properly to the investment community. We know how to negotiate properly on behalf of our companies to achieve best valuation, best structure, best terms from the best investor or best buyer. Because we're in the market every day, we understand who the investors are. We understand who the acquirers are. We understand the current base of multiples that are being paid or acquired for companies in the cannabis sector and other sectors. So we're current in the market all the time. This is my contact information and Mark's contact information down in D.C. And lastly, I'm going to pull up a copy of our research report that we issued back in late October. This is Wall Street's first sector report on the cannabis industry. As you'll read, if you can read this first page, I'm not sure how clear it is for you guys, but we are completely open and transparent about not only the opportunities in this space for investors and companies, but the challenges and dangers in this space for public-private companies and also investors. And there exist a lot of them on both sides. So we track all of the, we have an index, we track all of the public companies and how those companies are performing. Performance, by the way, was spectacular in Q1, and we've been down since. The market, the cannabis sector, has been stabilizing in the last couple of weeks, but we had a very, very rough, let's call it 8-month period between the end of Q1 at the end of March and up to a couple of weeks ago. The cannabis sector for the public companies has really been being sold down. We follow the 10 categories of the cannabis sector. This is not a homogeneous sector. There are a number of different business models, different technology offerings, different service offerings, and we categorize the sector into the 10 different sectors you're looking at there. These sectors have varying profitability, they have varying business models, they have varying time to market, varying sales cycles, so you can't look at this market as all the same. You really have to dig in and start to look at it from a much more granular perspective, and that is how we track it. These are the companies by each sector, how our index is categorized into the different sectors and the sector weightings. We track the key news, announcements, every month that we produce this report. And as I say, we also track all of the capital markets transactions. Here you're looking at all the private placements and investments, capital raises that have been done in the sector through October. Here you're looking at all the M&A assignments of the companies that have done through October. By the way, we'll be releasing our year-end report shortly. And with that, Derwin, I think I will stop and take questions if there are any.
Okay, Scott, give me a couple of seconds to queue up questions. I know you said something about your clients, and you will be announcing that soon, but this question is, I guess, concerning what cannabis companies have you invested in?
Sure. I'm not going to divulge names yet. Obviously, we want to, and we will once we, formally release those at the beginning of the year along with our board. And before I answer, I just want to clarify: we're not an investor. We're not a fund. We're not a principal investor. We're an investment banking firm, so we represent companies that are looking for capital, and we represent them as a placement agent. So we go out and raise money for our network of investors. The transactions we've closed this year on behalf of our investors have come from institutions, not from individual investors, which has been interesting because it's not been that way for the majority of the industry. The majority of the industry has seen most of their investment come from individual investors. We've been able to close several rounds of investors with private equity groups, principally in New York and in San Francisco, LA, so California and New York. The investment structures have typically been in the form of convertible notes, and that's been true for the industry as a whole this year because the valuations in the sector for public companies are still quite extended. It's been quite difficult to raise equity capital to sell common stock because it's hard to justify valuation by any metric. So the investors that have been coming in to the industry as a whole, and the ones that we've been closing on, have been in the form of convertible debt, where there's a debt instrument, and then there's the opportunity to convert that debt into common stock. So sort of a hybrid between equity and debt with an equity kicker.
Next question, Scott. Do you have any plans to provide market making on behalf of your clients?
We do not. The investment banking firm through which we process all of our banking transactions and which holds all of our banker, broker, analyst licenses is a firm in New York City called PICWIC, P-I-C-K-W-I-C Capital Partners, about a 60, 70-man shop, but it is not a market-making shop, and we will not be making markets in any of our client companies.
Next question. What are your thoughts on the likelihood of any companies being able to list on the NASDAQ or NYSE in 2015?
Well, I will tell you that we are currently engaged in 2 assignments where we are on the path to a NASDAQ uplisting. I think you're going to see a tremendous shakeout in the majority of companies, the 100 or so companies that are currently traded on the over-the-counter market in the States. I think, I don't know, 25, 35% of these companies will not exist within a year, either because they just don't have the business model or the offering to survive as a business, or they're not being compliant from a SEC reporting standards perspective. And like has already happened, FINRA, the SEC, is going to suspend trading or shut these companies down. So there is a natural evolution of many over-the-counter companies. When this same thing happened in the 90s with the Internet, in the 2000s after 9/11 with security, you had a rush of new companies coming to the over-the-counter market because it's quicker and cheaper and a much lower threshold to be public. And naturally, over time, the better companies, move up to NASDAQ. So, there are specific requirements that NASDAQ holds for becoming a NASDAQ trading company based on stock price, based on liquidity, based on the market value of the stock that's traded on a daily basis, I should say the dollar value of the stock that's traded on a daily basis, net equity requirements, number of shareholders. So there are very specific requirements. There's 3 tiers. And we intend to have at least 2 of our companies make it to an uplisting in the first quarter of next year.
Next question, Scott. Would you advise your clients to opt for an S1 rather than a reverse merger to begin trading publicly?
That's a really, really good question. The answer is yes, yes, and yes. I personally don't have any bias against reverse mergers. I've done them before. I've had ones that have worked out, one spectacularly. I've also had ones that have not. But clearly, from a company that really wants to be a mature, high-quality, best practices-oriented company, going public in a reverse merger will have some taint to it. Either the institutional investors that don't want to have anything to do with a company that went public via reverse, or board members that don't want to sit on a company that went public via reverse. It is not a death knell at all. It certainly you can create, and we have created successful companies that trade on over-the-counter and continue to trade over-the-counter with nice, juicy valuations and real liquidity. But on the whole, it is certainly preferred to go down the S1 route, but it's a harder route. It's a more costly route. It requires more time, but it certainly does set you up as a more credible entity.
Next question. What are your own criteria for determining if you will take on a client?
Well, there's a few. Certainly nothing that's set in stone. A lot of this is gut, just from having seen thousands and thousands and thousands of companies and continuing to see companies that come in or send in business plans every day. Ultimately, I would say the most important thing we look for is truly differentiated technology. Filling a gap in the market where other competitive products are not, whether that's functionality, whether that's efficiency, whether that's the life cycle cost of your technology. We're looking for companies that have competitive advantages and differentiation in the market that are going to lead to quicker market share gains and providing real value to their client base. That is the most important thing for us. I would say 1A is the team. And we're not unique in this philosophy, but it's just the truth. Great teams can take mediocre products and make successes, and bad teams can take great products and create failures. And so, there's not a lot of A teams, the letter A teams, that are in the cannabis sector right now. There's not a lot of A boards that are in the cannabis sector right now. That's certainly been the most challenging part of being in this business within this sector. Is really to find teams attached to great technology that we believe in and that believe what we can bring them, which is why we've, our presence in this space has been, inbound. People have come looking for us to help out their boards and their teams. And but in answer to your question, it's no different from what you would hear from, a venture capitalist. We look for great technology that has key current competitive advantages in the market, and then we look for teams that we trust, that we believe in, and that also believe in us to help build around them, and not to be so, prosaic or, controlling that they won't let other, great board members or a great COO or a great CFO join their team. So it's technology and people.
Before I go to other questions, Scott, a couple of our audience members would like for you to put back up your contact information, you and Michael's contact information.
Sure. Whoops. There you go.
Okay. Next question. How do companies looking for investment reach out to work with you?
Well, very good timing on your part, Derwin, because there's our
your contact information.
Yeah, there's our contact information, although I have the wrong emails up there. Mike, can you just create a page with the proper emails? They can call us directly. They can come visit us in New York or DC. That's the two ways. We have companies that just inbounds, and give us a call. And we're happy to speak to everybody because it's all a learning process. By meeting company after company, you really learn differentiation in business model and philosophy and vision. But as I say, most of the transactions that we actually engage with are personally introduced in by an investor or another management team that has worked with us before.
This next question, I think it's a great question, Scott, because you did talk about the importance of getting sell-side research or having coverage for your publicly traded company. And the question is, what's the process for getting research coverage? So how would a publicly traded cannabis company get you to cover their company?
That's also getting to know the company, meeting the people, having 3 or 4 or 5 rounds of phone calls so that we can dig in, ask questions, get really smart and really embedded in the business, in the business model, in the growth strategy, in the software development cycle, in the financing needs, in the use of proceeds, on how money would be deployed. It's really a process of getting us smart about the business so that we can come back with confidence and with having done our homework saying we can help. We really think we can provide value because we're not going to take on a client if we can't, including research. So it's really a process of getting to know each other as people and as bankers, analysts on our side, as operators on the company side, and us believing that our research and everything we provide can really help.
Next question. Do you work with companies at pre-revenue stages? If so, how are they compensated? How are they compensating you for your work?
Traditionally we've not worked with by the way, before I answer this, Derwin, these emails that the audience is looking at right now will reach us. They're not our Viridian emails. They're another company that we run, but they'll reach us, so they're fine to communicate with us. Up until about a year and a half ago, we did not work with pre-revenue companies. It just did not allow us to deploy, the advisory side of the house as well as we could with a company that's a little further along. They didn't want to, because they had 2 guys sitting developing something, they didn't want to build a board. They didn't need to bring in a COO, you know what I'm saying there. But because we are lovers of technology and we see technology companies all the time, certain industries like cannabis, like cybersecurity that we're heavily involved with, some of the best companies are truly on the beginning of the curve, the 1 yard line going a long way. And so over the last year or year and a half, we have taken on, very few, I would say, maybe 3 clients that are pre-revenue that we have engaged with. So, it's the same philosophy, Derwin. Is there something truly differentiated there that's filling a gap in the market that if we could bring in the capital and build the right team to launch this product into the market, if we believe we can have some quick success in bringing in buyers of the technology, because as I said before, we also represent our clients' technologies for sale. If we believe that we can develop some quick market share because there's real call and need for their technology today, it's something we'll take on. But it's quite rare. And when we look at a new opportunity, we do 2 things in addition to bugging the companies with lots of questions just to get smart about it. We also make calls to our investor base about the company. We don't divulge the name, of course, but we'll describe the sector, the specific type of technology, and see if we have interest within our investor network, because we're going to be asked to raise money. We want to make sure we do some pre-qualification before we take it on. But we also make calls into our industry. We'll make calls into the U.S. government. We'll make calls into the pharma companies. We'll make calls into the communications companies or to the dispensary owners to see if this is a product that they would buy. because again, we're going to ask to also to come on to help affect the scale of the business. So we pre-qualify every assignment before we take it on, because we're a boutique firm. We're not Goldman Sachs. We can't handle 100 assignments at one time, so we have to be right. And we sort of try to de-risk it on our end by already talking to investors and buyers before we ever take it on an assignment. That generally keeps us out of pre-revenue companies. But again, if there's something that's truly special about it and where there's a current need for that technology, we will make an exception.
Have you published any individual cannabis company reports?
Yes, we have. We just released a report on Afinor, Canadian ag tech company, and we'll be releasing another report on a specific company by the end of the year. And we are currently engaged by another 5 companies, public companies in cannabis, to write company-specific reports on them as well.
I think you touched on this already, Scott, but how does an investor establish a relationship with Viridian? We are interested in investing in your clients. We are investors.
Pick up the phone and call us. Send us an email. While this is a practice for us, we really are. We're very, very passionate about what we do, and we take our business very personally. We work 24/7, and so we will get back to everybody that calls. And the best way to reach us is to just reach out to us.
Next question. Do you expect to see a mutual fund or an ETF in 2015?
I can't speak to the mutual fund side there. I doubt it. And for the same reason, I'll comment on the ETF. We've worked with S&P before in creating ETFs in a different vertical. And there are very specific liquidity requirements, market cap sizing requirements that have to be there in order to provide the technical capabilities for an investor to trade the index. There has to be a certain number of shares traded. There have to be a certain number of shareholders. There's got to be certain market cap requirements to create an index that will have true liquidity to it. Because if it doesn't, there's no advantage to buying the basket of stocks if you can't exit. You might as well go pick your spots in individual companies. So I believe there will be an ETF in this sector. I don't know if it's going to happen next year. I don't think among the current crop of public companies it meets the current requirements or metrics to support an ETF. Certainly think by 2016 that will be in place.
Scott, you're pretty popular. We're getting a lot of questions. Does Viridian have any current interests/relations within Maryland?
Within Maryland? I don't believe so.
Okay. That's all they asked. I don't know what that was in reference to.
Yeah, I don't believe so.
Would Viridian be open to non-disclosure agreements initially as a VC for technology-based products?
Always. Because we're licensed and under SEC and FINRA regulation, we take disclosure very seriously and have great sensitivity to it. So we always want to sign NDAs in meeting a new prospective investor group or company, both to protect you and protect ourselves.
Next question, can we subscribe for your research?
Yeah, the sector research and the company research is not paid for by readers that want to access it. If you go on to viridiancr.com now, you'll see that you can download our Viridian Cannabis Industry Report, which includes our index. All we ask is that you provide, I think it's your name and your email and your company and affiliation, and then you're able to download the report. That will be the same procedure for downloading our company-specific reports as well.
Please provide insight into Viridian's fees and compensation structure.
I can't do that other than to give you a very macro look at that. When we engage with call it a public company, there are advisory fees, there are success fees on banking, both M&A and raising capital. There are success fees in when we sell your technology and book a contract for you. We get paid as an advisor, and we get paid as a banker in the traditional ways. We also receive upfront equity in our client companies. Ultimately, we're not here for fees. I mean, they're fine. They help me pay bills for my guys and the company, but that's not why we're here. We're here to build the enterprise value, the equity value of our client companies. And so by having an equity stake in the company, our interests are purely aligned with the company, its management, its board, and the investors. And we all have one goal in mind, and we're all pulling in one direction, and that's to move the needle on the value of the company. So that's sort of a general look on how we get paid. When we get into a specific negotiation with a company, obviously we talk in greater detail.
Now, Scott, how does the research model work? So it's pretty much independent research. The companies that you cover do not pay for the research. I mean,
no, they do pay. They do pay for the research. This is paid for research, and there's different models of that, both cash and equity, and sometimes both. Research is not a cheap effort to produce, and although some might think that the research is tainted because we get paid to write it, in fact, having been an analyst on Wall Street for 30 years, there is no such thing as non-tainted research. When I was an analyst at the big Wall Street banks, you got paid as an analyst because the company would also bring its investment banking work to you. So if you put out research on them, they'd engage the bank as a M&A advisor or to raise capital. So we do get paid for our research. We earn that fee. As I told you about before, the impact on our clients' stock prices and volume, trading volume, just in 3 months after we produce this research is extremely material. So yes, we do charge for our research. We don't charge the readers. We do charge the issuers.
Yeah, that's what I was referring to, the readers.
Yes.
So back to this Maryland question, I guess they gave a little more detail. Does Viridian have any current interest/relations within Maryland relating to the new parameters in Maryland of the new finalized MMJ regs for cultivators and dispensary licenses in 2015 and 16?
Derwin, I didn't get that question. Can I ask you to repeat it, please?
Does Viridian have any current interest/relations within Maryland relating to the new parameters in Maryland of the new finalized MMJ regs for cultivators and dispensaries licenses in 2015 and 16?
Hold on one second. Yeah, Michael is telling me that we've spoken to one company in the state, one startup group in the state, but we're not engaged with any company in that state currently.
Well, Scott and Michael, that concludes our Q&A. Any last comments?
Yeah, my comment is thank you. I appreciate the opportunity to speak to everybody. We certainly are, we're a startup firm in our own right, at least in the cannabis sector we are. We've only been here for a year. So we're interested in speaking and meeting with as many companies and people as possible. It helps us learn and ultimately brings the clients that we want to engage with. So we look forward to hearing from each of you and getting to meet a number of you as well.
Thank you, Scott and Michael. That concludes our presentation.